But was it back end as a service, I think was the description, yeah, which was kind of a cool way of rethinking the whole thing. But I was thinking about the neobanks, and as a journalist covering them when it all started to happen, it was so exciting. And as someone who's been interacting with banks for a long time, remembers the good old days of building societies and mutuals, and they all sort of eventually merged into it's kind of like black hole theory, I think, in some ways, banking, because of course all of these other planets slowly get sucked into this big thing. And of course at the last GFC, we saw a whole lot of smaller banks become part of bigger banks yet again. So all the competition we'd spent a lot of time carefully and slowly building up disappeared in one major financial crisis. And the great thing now is that technology has enabled a whole rise of new great FinTechs and neobanks, challenger banks, whatever kind of bank you want to call it. I do get occasional calls from PRs who sort of have a very specific name for their kind of bank. But it's a fascinating space. And we were just talking about earlier, you have to think about this landscape. There is something like $3 trillion in deposits in bank accounts. There's another couple of $1 trillion in mortgages. And then let's just think in business, there's probably another trillion lying around in and out. So we're talking about nearly $6 trillion as a market, which is just extraordinary. So let's turn our attention to banking as a service and the impact it could have on the FinTech landscape in Australia. And to do that, we have Reshub from Q2, Simon Costello from Frankie and Steve Weston from Bolt Bank. Now, the aspirations of the neobanks might not have yet met expectations, but they're coming, and banking as a service might be the killer product that meets that need. And to take us through this discussion, Kate Wilson from RFI Group is our moderator. Ladies and gentlemen, please put your hands together, warm them up for our fabulous panel. Over to you, Kate. Thank you.
Thank you. Thank you for joining us for this session today. I'm Kate Wilson. I'm Research Director and Deputy GM at RFI Group. If you haven't heard of RFI, we are a market research and intelligence business focused exclusively on financial services. So I spend a lot of my time looking at key trends in the market, thinking about how customer problems are being solved or not solved by the industry. So all key topics we'll talk about today. But we are going to be talking about banking as a service. I've been thinking over the past couple of days, listening to the other sessions, just how topical this has become. And the idea of collaboration and partnership just seems to be even more important in the FinTech ecosystem and more broadly in financial services at the moment. So really looking forward to the discussion. We're going to learn a lot about banking as a service and about the success of my three panellists in this space. Before we get into that, I'm going to hand over to the panellists to introduce themselves. I'll start with you, Reshub.
Thanks, Kate. Hello, everyone. My name is Reshub. I lead the solution teams for Q2 in Asia Pacific. Q2 is a software company that provides financial experience software. It's New York Stock Exchange listed. In Asia Pacific, we focus on providing lending technology. We have been the integral partner to many well-known fintechs in Australia and New Zealand.
Steve, you need no introduction, but...
Thanks, Kate, and good afternoon, everyone. Steve Weston, I'm founder and CEO of Volt Bank. Our business model is largely banking as a service, so the majority of our customers will come through businesses, and I'm sure we'll talk about that more today.
Hi, I'm Simon Costello from Frankie I'm the co-founder and CEO. We exclusively work in the identity and fraud space of the stack. We run most banking as a service providers in Australia, including Volt and other tier 1 banks.
Before we get into some of my key questions, I think we do need to start off with a definition. What is banking as a service? I've heard it referred to and referenced a few different ways over the last couple of days. So what I might get you all to do is just talk a little bit about what you consider banking as a service to be, and perhaps as well how you would differentiate it from something like white labeling or from embedded finance. Reshub, do you want to?
Thanks, Kate. Sure. So for me, banking as a service is this unbundling of banking capabilities that any brand, not necessarily FinTech, any brand can then use those capabilities and embed that deep into its user experience. There's a subtle difference from white label banking or traditional white label banking for me. I think the difference is the customer experience. So if you look at white label banking, for me, that's still a monolithic kind of experience for the customer, where you might as well just remove the logo and put something else. It's the same experience. Whereas I see banking as a service is more revolutionary in the sense that it would be deeply embedded or contextual to the customer's experience.
Steve, as you said, Volt is very much a banking as a service provider. How do you define banking as a service?
I am not a purist, so you could get a debate. What is this, embedded finance or integrated banking or banking as a service? I like to think of it as a customer doing their banking through one of their business partners, whether that be Google or Apple or an airline or a retailer or a FinTech. The customer will open their account and usually transact on their account through their business partner's app or web rather than through a bank. And I'm sure we'll explore a bit more in detail, but at a high level, you don't open the account through Volt Bank or through one of the major banks. You'll do it through your favourite business partner. And we'll talk about their motivations later, I'm sure.
Yeah, I'd probably add to that. Banking as a service, as sort of implies, it's almost renting a banking license in some of the software that sort of it uses. Historically in banking, it's very much build everything from the ground up, everything bespoke, hugely costly, takes a long time, etc. This is really leveraging what's already there. And if you can do a subscription-based model, it's going to be cheaper, hopefully going to be faster, and hence going to be materially different if you're using a banking as a service model versus build your whole bank yourself.
And the other question I have, I guess, around definition is banking as a service gets referred to as different things get called banking as a service. What to you is the biggest misconception about banking as a service? I'll throw it open to all of you.
All right. So for me, white label banking, already spoke about that, was one thing that people confuse banking as a service with. The other thing that comes up a lot is open banking and banking as a service kind of gets clubbed in together a lot as well. For me, open banking is about customer data, how you access that in a rapid and compliant manner, whereas banking as a service is more about, as Simon says, renting banking capabilities so that you can provide that to your customer. I understand why it gets clubbed in together, because in tandem, they can provide really personalized, very contextual experience for the end user, and I think that's what I guess most of the banks here is going for, I guess.
Yeah, thanks, Resh. I think that white labelling point is a key one. Everyone thinks banking as a service must be white label. In fact, our initial partners that we've got in testing at the moment have Volt branded deposit accounts, so they don't want to confuse their customers that they are a bank. They know that customers are going to want to put their money with someone that they can trust, so that Volt Bank is really important to them. So that's one of those misconceptions, that it's all about white label. Many times it will be, but certainly our initial partners are all using Volt Bank branded product.
Yeah, I think that idea of trust is something we'll probably come back to as we go on today. And I have been guilty of referring to banking as a service as being like white labelling, I think, as well. Simon, anything that you would add to that in terms of misconceptions?
Nothing to add for misconceptions, no.
Steve, I might get you to talk a little bit about your strategy at Volt around banking as a service, being a banking as a service provider.
We pivoted to banking as a service last year. The truth is we didn't. If I go back to our original business plan, which was crude and it was high level, and it was in 2017, we said that the majority of our customers we expected would come via business partnerships. And that is actually how it played out, plus some. The demand from businesses has been far greater than we could have envisaged. But we didn't know about this term called banking as a service at that time. So if I go back 4 years, we were looking to answer two questions. What would customers want and in particular need from banks in the future that they may not be getting from the incumbents, and go and design and build that, and that's what we have commenced the journey of doing. The second question was around business models, and you'd seen almost every industry on earth go down the platform path, but banking hadn't, and it was very clear you were seeing companies with access to big customer numbers wanting to deepen relationships with their customers, wanting to share their data and understand what they're doing so they could do more with them or give them more appropriate services. Wanted to reduce friction, particularly around payments if you're working with customers, and absolutely have a profit motivation. Now, the way quite often that you, to achieve those outcomes, you needed to become a bank yourself or have partnerships with banks. Most banks don't have the technology capability to work with businesses in the way that banking as a service is designed. So when we were starting the bank, it was, do we go down a more traditional digital banking, branchless path and acquire most of our customers through social media marketing and the like, high cost of acquisition, heavily contested area? Or do we actually follow what appears to be this evolving trend? Now you hear every consultant in town, the McKinseys and the BCGs and whoever else saying the next evolution in banking is banking as a service. I guess looking back 4 years, we took a punt. It wasn't as clear, but I have to say the demand for banking as a service from businesses approaching us is quite incredible. And so we didn't pivot last year. That was Microsoft were very helpful with some PR, and it was Vault 2.0. That's something else. We always were going down this path.
You were just ahead of the trend.
Oh, there's a crystal ball. It was so clear.
You touched a little bit there on the incumbents, and I think thinking about that pivot, the idea of neobanks versus incumbents is obviously one that comes up a lot, but thinking about the other obvious banking as a service provider in the market, being Westpac, what advantages does Vault have compared to a provider like Westpac or to an incumbent provider?
If we were late at night, I'd tell you a story about maybe the thinking of Westpac, because when we were starting, we had starting Vault, we had every bank in the country, it felt like, at least the big guys coming through and pressing the flesh and seeing what you were doing. And one of those banks took a particular interest in banking as a service and have gone down that path. So whether that, look, it's no secret, every bank knows about it, it's just bloody hard to do, as I'm sure Westpac are finding out. The challenge for starting banking as a service as a startup is it is hard to build the technology. You have no customers, you have to raise capital, you've got a particular interest from regulators making sure you don't muck anything up, which is less of a pressure for the big banks. The issue that they have is not as much about legacy technology, which is often called out as an issue for them, although they do need to embed these new technology platforms into the mothership for regulatory reporting and all those sorts of things which are complicated. The bigger issue actually is their business model. So you have big banks that are bureaucratic. You'll find the new business lines eventually getting sucked in to the big business, particularly if the senior sponsors should leave the organisation. And then you just have the natural conflict. If I'm running a business and it's a big business, it's responsible for most of the profit, and then this new upstart business is coming along, when we turn up to the investment committees to make decisions, or pricing committees or compliance committees, sometimes the new businesses can be crowded out. So Westpac's challenge will be less about technology, I think, and the strategy is certainly right in my opinion. It will be more about how they can traverse the frustrations of the big bank bureaucracy.
Simon, you mentioned before you provide services, or you have partnerships with key banking as a service providers in this market, including Vault and Westpac. Do you want to talk a little bit about the success story of Frankie One and how you secured those partnerships?
Yeah, absolutely. But even actually to further on from what Steve was mentioning, just to, I think, to give some context of banking as a service and I think what material impact this will have on Australia and going forward, is I think you want to think about if you're going to try and do a banking service or create a bank, and Steve will know all very well, it costs about 100 million plus to be able to do this. This is not insurmountable amount of money and capital raising and the size of the market, etc. Very challenging. So what is your alternative to be able to do that, to be able to offer banking services? This really is the only other option to do it, is renting somebody else's banking license. Now, if you look at innovation and like the trends, it all comes down to cost and time. can I do this faster? Can I do this cheaper? And then you're going to see actually different business models starting to coming out. And so banking as a service, whether it be Westpac, whether it be Volt, whether it be otherwise, you're going to see some really interesting companies that have not been able to ever be able to have an opportunity to be able to offer some of these services. And that's why I think it's really actually quite interesting what's happening in the sector and the industry. And I personally am obviously quite excited about it. But coming back to your question, how it is that we had a little bit of success in relation to both Westpac, Volt and others on the banking as a service, it's because this is somewhat new. Banking as a service, we're talking about here, what is banking as a service? It's not well understood. And so it's just, I suppose, not the technology, et cetera, that's available. We are a pure product company or pure tech. You know, we very much are looking at seeing the different trends, and we have now created a product specifically for banking as a service. We can obviously speak very much to the banks itself. If anyone knows the background behind Frankie, we actually originally had plans to be a neobank ourselves, so very much know how hard it is to be able to build something like that. As far as how is it we got in with Westpac, how is it with Volt and others, and I'd actually would say is because we are real product and technology driven and something materially different than what's probably out there at the moment.
I think the key thing that I'm learning about banking as a service and talking to you three as well is just the importance of partnerships and collaboration. And Reshub, I might also ask you, just based on your experience in being a tech provider, what are the key advantages that you see or you think that banking as a service can help fintechs, other providers to realise?
Definitely. So for me, I feel like banking as a service will allow any brand, doesn't need to be a fintech to become a fintech. So this is what we've learned from providing, digitizing lending in Australia the past few years. So as a technology provider, be very clear on what problem you're solving, and also be very clear on what problem you're not solving. The second bit is traditionally systems and processes were built to last, but now they're kind of built to change or built for change, need to be built for change. And the last one, actually, Steve touched upon, I talk about this a lot. Digital is not only about technology, it's a mindset. So you got to challenge your consumer, you got to challenge some of these banks to, change their mindset and get rid of that bureaucracy that Steve was talking about.
I will open up for questions from the audience in just a moment, but before I do, I think a key question people in the audience are going to want to ask is about your advice around creating these partnerships that you all have. Is there any advice that you would give to fintechs or customers in the audience who are trying to create these types of partnerships to get a product into market or to solve a customer problem?
Yeah, I absolutely. And I think there's two angles here. One is if you're a fintech and you want to offer your customers the opportunity to open bank accounts and do banking and share data and that sort of stuff, it will be really difficult to get a banking license. So you'll need to partner with either somebody like ourselves. Westpac are probably going for the bigger end of town, and we have a partnership with a company called Rails Pay here in Australia, but Rails Bank, who are the global leader in integrating between banks who don't have the technology capability to integrate directly with businesses. They do all the heavy lifting. So we're a small team. The level of demand that we've got from businesses we can't keep up with, particularly smaller fintechs, whereas Rails Pay certainly have that capability. The other stakeholder are those who provide services to banks. Now, there is absolutely no way that someone like Volt could continue to invest in every service that we require to run the bank. So I don't know, how many integration partners have you got now, Simon?
A little over 320.
So 320. So that would just be continuous. So all we would do is KYC, AML, cyber, or you can go to Simon and he says, here's my suite of service providers. Tell me what you need, what you look like, what country you operate in. Here are the partners that you should use. Let's turn those guys on. And you kind of do it tomorrow rather than it being an 18-month procurement process, integration testing, and so on. And I'm sure for the last couple of days there has been this question around collaboration and how is it that businesses like these two guys run have been able to crack the big end of town. And many of you that have tried, it's just so hard, just getting a meeting with C-suite, let alone going through the procurement process. It's kind of impossible. And you can destroy your business waiting for that one big win. So quite often, and it's a good thing about the new entrants, so Simon and his team and our team grew up together. We kind of had no customers, and a couple of the Neos gave Simon a start, and he kicked off. There's a few of the Frollo team from the open banking market in the room or in the building today as well. We were their first customer. They had no one. We lived together in the same building for a few years, and now every single bank, particularly the big guys, are knocking, smashing doors down saying, can we have some of that stuff that you're doing with the smaller guys? So the question is, do you start small rather than starting at the big end of town? Or if you can't get into the C-suite in a big bank that you need to talk to make a decision, who are the people who are able to get in? And quite often they'll be consulting firms, so the PwCs and the Deloittes and KPMGs and so on. If you can take your wares and show those guys, they're always looking for a story to show their clients at the bank. Just think differently, I would say.
I can see both Simon and Reshub nodding along to that. Anything that either of you would add in terms of the opposing viewpoint or perspective?
No, I think that's largely right. I think in any business model, be trying something new, you want to look for the early adopters. Who's going to be an early adopter? Someone that is tech-enabled, someone that can take more risk than someone else because they want to be that first mover. So for our case, reaching out to a Neo is always going to be an easier convert than it is going to be a tier one bank. But getting someone like a bank enables you to leverage and go a little bit higher, and then you can actually start going for the more traditional players. That's the approach we would play, and I would imagine for any other fintech, etc., would operate in the same way.
Just to add to that, actually, Steve raised a really good point, and we've actually built our business in Australia serving some of these smaller fintechs, which have then gone on to change the industry. So think of Prosper, think of Athena Home Loans, and now the big end of town is coming to us and asking us, how did you do that? So I think that's been a good approach for us as well, because they're willing to move faster.
And your price goes up all the time. Apart from your fintech founding mates, always get the right price and the good and the top service level. The big guys, unless you're hitting them with a big invoice, they don't value it. So always quote high, Simon and Resh.
I will throw to the audience. Are there any questions from anyone for these guys?
Great panel, guys. Quick question, Steve. So on a global basis, when we look at banking as a service providers, it's actually quite rare to see a BAS player be a primary license holder. So if you look at the US, you look at unit, amount, or choose any player, they generally will partner with a bank to do the deposits. If you had your time again, would you still get an ADI to be a BAS provider, or would you maybe take a different approach?
Oh, geez, you asked the hard questions. There were times last year during COVID where there were opportunities for Volt to do something like 86,400 did pre-COVID, and we said, no, we're going to be masters of our own destiny, and we're going to be worth a small fortune, and life will be beautiful. And Corona did throw some challenges our way, and there were times where I woke up in the middle of the night regularly thinking, shit, that would have been fun. If I talk about the partners that we are banking, what is the commercial benefit, I guess, to a Volt? It really is a lower cost of acquisition in a less contested market. Apart from Westpac, really, from the banking space, there's no one doing banking as a service. So you could spend a lot of money on the traditional forms of acquisition, or you could work in a less contested market, and that's what we've chosen to do. How we actually make money is exactly the same as all banks. So we raise primarily deposits and some non-interest income from payments from our banking as a service partners, and that deposit money gets lent out at a higher rate, mainly through mortgages, but in time personal loans and home loans. So when we were starting with a clean sheet of paper, we asked, where are the areas that are less contested in Australian banking that a new digital challenger bank can outcompete, and go after those? You don't have to be everything to everyone.
I might ask just one final question. I'm really interested from a customer point of view of how customers are going to be interacting, not just, I guess, with traditional banks, but with all the new players in the market. And as you said, Steve, the fact that they might be using someone like Google for their banking services. which to me points to a incredibly fragmented market and erosion perhaps of customer loyalty. Just a view from the panel, is that sort of future a good thing for the customer, or is it a bad thing for the customer? Do you have an idea about what a sort of a more fragmented market might mean?
The customer is the winner. So you're going to have all these personalised services. You're going to be able to do banking and get better deals and discounts and personalised services through whoever your partner may be, rather than and open banking will help there as well. What will it mean for banking? Yeah, there will be more specialisation. You are seeing now in some parts of Europe and the United States where some banks have no direct customers at all. They are purely banking as a service, and you'll head down that path. What will it mean? Does that mean the demise of the major banks in 5 years? No chance. They're just so big and they'll respond over time. But what you will see is smaller players like the people on the stage and others. You will see a change in the big guys and they respond. So we might not have huge market share collectively, but what you will see is demonstration that banking can be done in a different and a better way for all stakeholders, particularly customers, and the big banks will ultimately respond.
If I may add, actually, I agree with Steve. It's the customer choices will go through the roof. The customer has so many choices. I think an interesting way to look at it is all your life, all my life at least, I've gone to the financial services institution to get financial services. With banking and service will allow you to do is they will come to you. So think about your booking a travel package somewhere and you need money to a travel loan to do that. You'd first go to the bank, get the travel loan, then get the, I guess, tickets and the resorts. But here what you could do is the travel company, while you're booking out, would tell you, hey, do you want a loan? Click yes, and you're gone. So it's coming to you instead of you going to them.
Yeah, to actually add to that, what we're seeing in our data at RFI at the moment is eroding customer loyalty, and in particular, I think eroding loyalty from the major banks doesn't mean customers don't use the major banks, but it means that they are more discerning about who they choose to bank with and the products and the features that they want and that they need. So I think more choice in the market is just going to further disrupt what we currently see. So really interesting viewpoints from all of you. Thank you so much for all of your time and your insights. Please join me in thanking my panel.
And